Hey everyone, welcome back to Catch You on the Pip Side. This is Teresa, and today we're going to talk to you about how to count pips. One of the first things that you need to learn when you first start trading Forex is how to count pips. Pips stand for percentage in price. And that is what it is. It is a percentage in price. And the price that we're talking about is a cent. So we're all very used to looking at prices like this, $1.23. Okay, so if we're looking at this and it was $1.23 in, let's just say, Canadian dollars, when we look at this, we know that 1 is the dollar and 23 is the cents. When we trade Forex, we're actually trading even smaller components of the currency than that. So when we look at trading Forex, we're looking at trading 2, 3, 4, 5, 6. So in this example here, the 1 is the dollar, 23 is the cents, and 45 is what we call the pips. This is the percentage of a cent. So this right here is 45% of the way to a new cent, which would mean that this 3 would go up to a 4, right? We're on our way. We're 45% of the way there towards a new cent. This last number here, the 6, this is called the pipette. And you can think of this number like the mileage number in your car. It's going up so fast that you can't really ever capture it very accurately because it's always changing. For our purposes for trading Forex, we basically just ignore this number. So if you were looking to take a trade and you were going to buy, when you're buying something, it means that you think price is going to go up. And so you would be setting a goal or a take profit above current market price. So your take profit is going to be above or higher than current market price. And so what you do is, so let's just say that you were targeting a 10 pip goal or a 10 pip take profit. So if you wanted the current market price, which is this number here, if you wanted that number to go up by 10 pips, you would be adding 10 pips to that number. So you would go 1.2345 and you would be adding 0.00100. Okay, that's what it would look like if you were to write it out in full form. And so if you were to add those together, then you would have 1.23556. So really, in reality, all we did is add the 10 to this 45. 45 plus 10 is 55. So you don't actually need to write it out all the way out like this, like I did here, but I just wanted to do that for illustration purposes. So really what you could have done is gone 1.23456, and then below you would have just lined up your 10 pips to be under the 45 and then added them together, and you would have had your 1.23556. It gets a little bit more complex if you're adding a larger amount of pips to the number where it's going to affect the decimal before the 45 as well. So again, if we had 1.23456, and let's say this time we wanted to increase that by 100 pips, well, in that case, we would need to line up the 100 so that it is under the 3 and the 4 and the 5. And again, we just virtually ignore the 6. You can either just bring the 6 down in your final calculation, or you can just ignore the 6 completely. So you could go 1.2, and now this time, because we're adding 100 pips, we're now adding 1 to the 3, which makes it 4, 4, 5. And you could either just leave this blank where the 6 would be, or you can just drop the 6 down with you. Okay, so that would be how you would add 100 pips. Now, let's just say that we're looking at taking a sell. If we're looking at selling, it means that we think that price is going to go down. Okay, price goes down. So this time, current market price, we're expecting price to go down instead of up. So if we start with the same price, 1.23456, and we think that price is going to go down 10, then we would subtract 0.0010. And then again, same thing, you can just ignore the 6 or you can bring the 6 down with us. But in this case, we would get 1.2335 and then either bring the 6 or just ignore the 6. Okay, so that would be what you would be setting as your take profit if you wanted price to go down 10 pips from current market price. And if you remember our last video where we were calculating lot sizes, that's what decides how much you're actually earning per pip. So if on this trade you were using a 1.2 lot size, that's worth $12 per pip. And so in this case, if we earned 10 pips, we would go 10 times $12, which would give us $120 profit. That's what we made on this trade. Now, the exact same situation is true if you would have lost 10 pips. If you would have lost 10 pips times $12, then you would have lost $120 on that trade. So the numbers work the same in both directions. Mommy. Yes, honey. I want to have a school. You just have to wait a minute. Mommy's making a movie. Hey, sorry everyone. I just had to go put on a show for my little guy. Okay, so again, in those examples, if you had earned 10 pips, you would have made $120, or if you would have lost 10 pips, then you would have lost $120. Now, one thing that I wanted to talk about is that not all pairs work exactly like that, and it's good to be aware of them beforehand. So all pairs that are the Japanese yen, their pips work a little bit differently. So when you see a pair from Japan, instead of having 5 numbers behind the decimal, it only has 3 numbers behind the decimal. So it might look something like this, 117.406. Okay, this is what a Japanese pair might look like versus the Swiss yen. And so when you look at this, you treat it the same way. The last digit behind the decimal point is still the pipette and we ignore it. And then the number beside that is the pips, and the number next to that would be the pip if it had gone above 10, right? If this first number was 9 or under, then it would be 9 or less pips. But because this one is over 9, then it goes up a placement in your decimal placements. And now this would be read as 40 pips. Now, when you want to add or subtract pips to this, so let's just say in this example, you wanted to buy. So if you were buying, then you would expect price to go up. Okay, buying means price is going up. And so if we wanted to set a take profit on this trade of, let's just say 25 pips, your current market price would be 114.406 plus, and you'd be adding 0.250. That would be 25 pips for a Japanese pair. And so then your take profit, your goal would be 114.65 because we added 25 to the 40. So 40 plus 25 is 65. And then we can either keep the 6 or just ignore the 6. So if we just keep the 6, then this is what you would set in your MetaTrader 4 trading app as your take profit. And when the market, if you're correct and the market does go up, when the market hits this price, it will automatically take you out of the trade and pay you your profit. Now, again, your profit, how much you're making on this trade, is decided by your lot size. So let's just say in this example, your lot size was 0.5. So that would be worth $5 per pip. And so in this trade, you would have made 25 pips times $5 per pip. So you would have made $125 on this trade. And again, the same thing in reverse. If you would have lost 25 pips on this trade, let's say your stop loss was 25 pips and it hit your stop loss, you would have lost $5 per trade if 0.5 was your lot size. So you would be negative $125. And the sooner that you can accept the fact that you're not going to win every trade and that even professional traders lose trades, the better off you will be, because you're never going to win every trade, or you would be a billionaire. So that's how it works on Japanese pairs. So just keep that in mind. I'm going to shoot a separate video for indices that talk about how to, well, specifically for US 30, how to calculate your lot sizes for US 30 and how to count points on US 30. So that's it for now. Thanks for watching this video. Make sure to subscribe and share it with anyone else you know that's trying to learn how to trade Forex, and we'll catch you on the pip side.